Welcome back to XRP Insider, everyone. Today's crypto market is sending a very clear message, and that message is all about rotation, momentum, and smart money quietly moving into altcoins while Bitcoin continues to move sideways. The biggest headline of the session is absolutely massive for the altcoin market because Near Protocol exploded higher with a stunning 31% rally, while XRP ETFs just posted their strongest single-day inflow in weeks at an incredible $8.88 million. At the same time, Bitcoin stayed stuck near the mid-$76,000 range, showing once again that traders are starting to look beyond BTC for the next wave of opportunity. What makes this setup even more interesting is the fact that ETF money continues flowing into XRP, SOL, and HYPE products, even while Bitcoin ETFs are still seeing outflows. That tells us institutions may already be positioning themselves for the next phase of the market before the average retail trader fully notices what's happening. Now let's talk about the real star of today's market, because Near Protocol completely dominated the trending boards. The token surged all the way to $2.26, with more than $1.24 billion in 24-hour trading volume, making it one of the strongest performing major altcoins of the month. This wasn't just a random pump either. Traders are aggressively buying into the growing AI crypto narrative that has been accelerating ever since Near launched its AI-focused initiatives earlier this year. We're also seeing other AI-related tokens like Grass explode higher alongside Near, which confirms this is becoming a broader sector-wide rotation rather than a one-day move. The market clearly wants exposure to projects connected to artificial intelligence, decentralized data infrastructure, and scalable blockchain ecosystems. When you combine that narrative with heavy volume and improving sentiment, it creates the exact type of environment where explosive moves can continue longer than most people expect. At the same time, XRP holders finally received a major confidence boost from ETF data that honestly surprised a lot of analysts. XRP ETFs recorded $8.88 million in inflows, marking their best single day in weeks. That may not sound gigantic compared to Bitcoin numbers, but context matters here. XRP ETF products have now crossed $1.4 billion in cumulative inflows, and the consistency is becoming impossible to ignore. Positive or flat flows have appeared in 13 of the last 16 trading days. That kind of steady accumulation suggests institutional investors are not panicking during corrections. In fact, they appear to be quietly buying weakness, while retail traders remain distracted by short-term volatility. Canary's XRP fund led the flows with over $6.5 million, while Bitwise products continued adding exposure as well. This is important because persistent inflows often act as the foundation for future price recoveries once broader market sentiment improves. What's even more fascinating right now is the divergence happening between Bitcoin and the altcoin market. Bitcoin slipped slightly to around $76,750, while Ethereum stayed weak near $2,114. Normally, when BTC struggles, the rest of the market collapses harder. But that's not what we're seeing anymore. Instead, mid-cap altcoins are outperforming aggressively. Near is up nearly 49% on the week, Grass is up more than 43%, HYPE gained almost 39%, and several AI-related or infrastructure-focused projects are suddenly attracting huge attention. This tells us the market structure is changing. Capital rotation has started. Bitcoin dominance even slipped below 60%, which is a subtle but extremely important signal because it confirms money is slowly moving away from BTC and into riskier high-upside altcoin plays. Meanwhile, the ETF story keeps getting stronger for altcoins beyond XRP as well. HYPE ETFs added another massive $16.15 million in inflows, doubling total net assets in less than a week. Solana ETFs also continued climbing closer to the billion-dollar milestone in total assets. This is no longer just a Bitcoin ETF market. Institutions are clearly experimenting with diversified crypto exposure, and that changes the long-term picture significantly. When you have professional money managers steadily accumulating altcoin products during periods of fear, it usually means they expect stronger performance later in the cycle. Even though Bitcoin ETFs still showed outflows, the pace of those outflows is slowing down dramatically, which is another signal the worst of the recent correction may already be behind us. One thing traders cannot ignore right now is how quickly market psychology is stabilizing after the brutal sell-off earlier this month. Liquidations have dropped sharply from over $286 million yesterday down to around $174 million today. More importantly, the balance between long and short liquidations is finally returning toward equilibrium. Earlier in the week, longs were getting absolutely destroyed during panic selling. Then shorts started getting squeezed as the rebound began. Now the market is normalizing, which usually happens when forced selling and emotional positioning have mostly finished. That's actually healthy because sustainable rallies rarely start when leverage remains completely out of control. The fact that liquidations are calming down suggests traders are becoming more cautious and price discovery is starting to stabilize again. Another fascinating development today came from the top gainer board, where several smaller projects absolutely exploded with real trading volume behind them. Bob, also known as Build on Bitcoin, surged more than 73% with over $27 million in trading activity. Audiera gained another 67%, while Genius jumped more than 40%. These aren't just tiny, illiquid coins moving on low volume. There is actual participation happening here. Railgun also rallied over 50%, which highlights renewed interest in privacy-focused crypto infrastructure. We're seeing traders aggressively rotate into narratives again, whether that's Bitcoin Layer 2 solutions, AI infrastructure, or privacy ecosystems. The market may still look uncertain on the surface, but underneath, speculative appetite is clearly returning. Of course, not everything was green today. Some projects were completely crushed, and the biggest disaster was Blockstreet, which collapsed nearly 49% on massive volume. Analysts believe leveraged positions tied to that token finally unwound after appearing repeatedly on liquidation heat maps earlier this week. This serves as a reminder that volatility remains extremely dangerous in this environment. Even though altcoins are recovering, traders chasing over-leveraged positions can still get destroyed in hours. Nexus and Banana for Scale also continued pulling back sharply after earlier speculative spikes. So while the market is improving overall, risk management still matters more than ever. Now let's talk about the broader sentiment picture because this is where things get really interesting. The Fear and Greed Index slipped slightly back to 39, which still sits inside the fear zone. But honestly, that may actually be bullish. Why? Because some of the strongest rallies historically begin when traders remain skeptical. The market doesn't typically explode higher when everyone already feels confident. Right now, sentiment is stabilizing, not euphoric. That creates room for upside momentum if ETF inflows continue improving and Bitcoin avoids another major breakdown. The altcoin season index also remains relatively low, meaning we're not even close to full retail mania yet. If capital rotation truly accelerates from Bitcoin into altcoins over the coming weeks, today's moves could end up looking very small in hindsight. One of the biggest questions traders are asking tonight is whether Bitcoin can finally break out of this tightening range between roughly $75,000 and $78,000. BTC has been consolidating for several sessions now, and volatility compression like this usually leads to a major move sooner rather than later. Analysts say a break above $78,600 could neutralize the recent correction and potentially trigger stronger upside momentum. But if Bitcoin loses the $75,000 area, then the market may revisit deeper support zones before recovery resumes. Ethereum is also stuck below critical resistance near $2,150. And traders are watching closely to see if ETH can finally reclaim momentum after underperforming for much of this recent period. What's really changing right now is where the excitement lives inside crypto. For most of the year, everything revolved around Bitcoin ETFs, Bitcoin dominance, and Bitcoin price action. But now we're seeing entirely different sectors take leadership. AI narratives are exploding. Mid-cap ecosystems are outperforming. Altcoin ETFs are gaining traction. Privacy coins are bouncing. Even tokenized real-world asset projects like Ondo are gaining momentum as investors position around potential regulatory developments. The market is becoming broader again, and historically that's often the early stage of stronger altcoin cycles. At the same time, crypto-related stocks pulled back slightly slightly today, with companies like Coinbase, Robinhood, and Strategy all trading lower. But the declines were relatively mild and lacked panic selling. That's important because it suggests broader market participants are not entering full risk-off mode, despite continued uncertainty in macro conditions. Yields remain elevated, inflation concerns still exist, and the Federal Reserve outlook remains unclear. But crypto markets appear increasingly resilient compared to earlier this month. Another key detail many people missed today is how funding rates across major exchanges remained relatively balanced. In simple terms, the market is not extremely over-leveraged anymore. That reduces the probability of another sudden cascade liquidation event in the immediate short term. XRP and HYPE even showed slightly negative funding on some exchanges, which suggests certain traders are still betting against them despite strong ETF inflows and positive momentum. Ironically, that can become fuel for future rallies if those short positions eventually get squeezed higher. Looking ahead over the next 48 hours, the most likely scenario appears to be continued consolidation for Bitcoin while altcoins keep attracting attention. The recovery phase hasn't fully started yet, but the panic phase definitely looks finished. ETF outflows are slowing, liquidation pressure has normalized, sentiment is stabilizing, and institutional interest in altcoins continues building steadily. The biggest signal everyone is waiting for now is the moment Bitcoin ETF flows finally flip decisively positive again. If that happens while altcoins remain strong, the market could transition from stabilization into full recovery mode very quickly. So overall, today's market session delivered one very powerful message. The crypto market is evolving underneath the surface, while most people are still focused only on Bitcoin price action. Near's explosive 31% rally, XRP ETF inflows hitting multi-week highs, hype funds doubling assets within days, and Bitcoin dominance slipping below 60% all point toward the same conclusion. Capital rotation into altcoins has already begun. The question now is not whether altcoins can move higher, but how long this momentum can continue before the rest of the market finally catches on. And if institutional inflows keep building the way they are right now, especially into XRP-related products, the next phase of this market could end up being far bigger than most traders currently expect.